This meeting is being recorded.
Namaste. Welcome to this week market outlook. In the previous week video, I opined that the market is likely to continue its sideways journey and it is most unlikely to continue the momentum and there will be sideways movement. Thereby, what I meant was one day it may be up and another maybe and another day it will be down. Let us examine how the market fared during the last trading week. This is how the market closed. This was on 26th December 2025, the last working day of the penultimate trading week. And on 29th December, being Monday, market opened. And on that day, market was down by 100 points, as you can see here. And after that, market was down by 3 points. And on Wednesday, market recovered and posted gains of 190 points. And on 1st January, the beginning of the new year, market posted gains of 16.95 points. And on 2nd January, that was the previous Friday, market posted a gain of 182 points. And finally, on a week-on-week basis, market posted 286 points in positive territory and gained 286 points. And if we consider the volume aspect, volume was up on the first day, and again it increased on the second day. Again it increased on third day, and on last two trading days, the volume was down. The change in volume was down. Thereby, if we see that with the help of the few charts like we were doing, let us try to analyze and predict the market behavior, likely behavior in the days to come. రోషన్ ఒక 10 నిమిషాలు అయినా. And this was the last trading day on which market opened here, and a very short low was there, and market went up smartly and closed near the day high. And if we consider the last this is the first trading day, and on which the market opened almost at the close of the previous trading day, and the high during the day is very near to the open and not much, and the previous day high was not surpassed, and it made a lower low compared to previous trading day, and the close is near to the day low. And the next day also almost it opened at the same close level, and the distance between open and high is very low, and the low is lower than the previous day low. And the noticeable factor is there is a slight increase in volume, and after that the next day market opened low, and the low open itself is the almost a day low with a very good increase in volume, and market went up, and it surpassed previous 2 days high. That is the important thing here. This day high and this day high, both highs were surpassed, and the market almost opened above this level uh, of the previous trading day high, and that itself is the low of the day, and it went up. And on the next day, the market was almost opened at the same day, same level of the previous high, but could not sustain it. There is not much high, and there is not much low. Also, range is very low. And on the last trading day, market opened almost at the same level and went down slightly, and a new high was made, and the last 2 days high was surpassed, and the high made was good, and the close was near day high. So, if you are interested in day trading, the one of the popular methods that is followed by several day traders is when today's trading days high or low is above or below of the last two trading days high or low. For example, if you consider this high, when this high is above the last 2 days high, this is the first day high, and this is the second the to this day, these are the two previous days. These two highs are surpassed by current day high. So generally day traders who generally trade for the day only take into consideration this aspect, and when this 2 days high higher of the 2 days high is surpassed, they go long. And when the 2 days lower of the 2 days, for example, here when they are trading, they will consider low of this day and low of this day. So out of these two, this is the low. This is the lower low than this low. So when this low is cut and came down, then they will take short positions. They will consider is one of the day trading techniques which one should remember. When high is about last two previous days high, or low is lower than last two previous days low, that gives a chance for the day traders to go long or short for the day, only for the day. That is called as 2 day theory. That is one of the popular day trading techniques. And when we move on to the other charts or indicators we were using, here you can see this. And once this important weekly level is crossed by the price on this day, next day it posted very smart gains. So this level is very important, and this level is now situated at 26,095. Give me 1 minute, please. And this went smartly, and this modified money flow index is also showing good accumulation, volume is increasing, and thereby denoting some strength is there beyond the move. And if we move on to the others, the price is above all these levels, and advanced is showing upward strength and going up strongly, and above these two levels and above this support level of 25,850, thereby indicating that the strength, the move has some strength. And we shall consider here, as I told you earlier, the market is clearly in the overbought area and did not come down, and it is still there, hovering there, and it should at least it started its journey from here and met this upper band here. So again, it has to come down then before rising further. So I think it will be a good uh, practice, or a cautious approach is advised, rather than taking for granted that this momentum will sustain, because it is already in the overbought area. And if we move on to the next lines, here you can see very well that it is also indicating that market is does not have strength. If we consider trend strength index indicator, it is clearly showing that there is no strength in the trend. It is almost flat and just crossed this. And due to lack of strength, it is questionable. And I am not sure that the momentum will sustain or not. And again, also here also you can see that it crossed the top band and started its upward journey from the here, and within 3 days it crossed, and this width of the bands also very narrow, thereby indicating there is a probability of trend change. and here the important level happens to be 28,000 26,061. So 26,061 is an important level below which market will be down. And here also you can see that it is reaching the upward band here. Here you can see it reached here and came down and again started its upward journey, but still it did not meet here. And the modified momentum indicator is also showing some strength. And as you can see here, it did not reach the overbought area, and still it has to reach the overbought area. So the market is most likely to move somewhat upward side before coming down eventually, uh, but the sustained momentum is not possible. So once the 26,450 level is reached by the Nifty during the current trading period, it will be advisable to adopt a cautious approach than to consider that this momentum will sustain and the market will rise further. Some more possibility is definitely there for upward side, but the upside is somewhat limited. Not that much gap is there, or that much movement possibility is there. 26,328 was the close. 26,450 was the indication now we are seeing. So at the most there is 100 to 120 points upside potentiality is there. This is what I am presuming as of now. And once this level is reached, and if it sustains above this level for at least 3 days, then the next target of 27,000 can be assumed. But till then, a cautious approach is very much advised once this level is reached by Nifty. That is what I got to say for the coming trading week. We shall meet again next week. Till then, wish you very happy trading. Thank you.